Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good morning, everybody. I hope you've had a nice day. Looks like we have a very red morning. Funny because we had quite a green day going on pretty much most of the evening yesterday and last night. It was only when the US markets came on that we turned to red. So I will zoom in on Bitcoin and let's take a look at what is happening. So our very bottom line support, this blue line here, this line was kind of our final chance. And as I've taught you guys, supports count if you go down and pop right back up. And so technically this would have remained a support. We'd have had to adjust it to here. But if we close here, it's over. There's no support here. So I have been expecting, I really thought we would move a little further, but once we crossed this line about a couple weeks ago, it was pretty clear that our momentum had we were losing some momentum. This was a surprise. This was a surprise, and I did not expect us to start down here. So with the structure of Bitcoin where it is, things are looking very, very ugly. So let's actually take a minute. I'm going to go to the monthly chart. We are going to close our monthly candle in 1 day and 9 hours. And I want you to see what is happening on the monthly. In fact, I'm going to switch over to this is kind of the long-term view. We have our all-time highs in yellow. We have our percent gains from the bottom of the bear market to the top of the highest peak, and then our entire retracements. So I've kind of got everything mapped out really good on here. But look what we are doing. We had this massive red candle in June, and how these big candles, they hold their weight. The best thing we could have done is had a flat July, but when we make an attempt, and it's a weak attempt, to get past the midpoint, it's not strong. It actually is probably, you're better off having a bad July and a stronger August, because you've kind of established a bottom and now you're working on fresh momentum. When you have a giant drop and then you have this weak attempt to recover, it's pathetic. It shows weakness. And that's exactly what we did in July. And now August is about to close, and if we close at the bottom of our line here, there's just a million things wrong with this. We found support on the all-time high from the 2017 high, bounced off it weekly, and now we're revisiting it. Whenever you touch support multiple times, it's not going to hold. So we are in for a drop. So where is the drop? Where is the next support at this point? Well, it is found on the body of our 2017 top. So if you look at how the body stopped here and then returned down the next month, this body is sitting at about 14,000, 13,900. So this 13,900 is unbelievably significant, and I'll tell you one of the reasons why. First of all, this is the body which establishes our resistance. So under normal circumstances, I'll just draw it in just so you've got it. So this would have been a major resistance. All-time high is obviously resistance, but this is the more powerful one, and this is how I trade. I use the bodies when I trade. Well, now that this is in the books, look what happened when we came down through 2019. Our high in June of 2019, the wick of this candle, as you can see, it's at 13,880. The wick of this candle found resistance on the bodies of these. So this became a gigantically important line. And when we made our attempt at breaking out back in October of 2020, where did we find resistance? Exactly on this line. Once we broke it, we were off to the races. So this line is very important. It's the most important line on the chart of Bitcoin right now. And with this breakdown in the works, because this is a breakdown, if we close even close to this, I mean, it could be a swing of $1,000 on either side. It's going to be, it's going to create a target of on Bitcoin of $14,000. It's not pretty, and a $14,000 Bitcoin is, yeah, no one would have seen this. Now, long term, I expect Bitcoin to be way up there. A decade from now, I'm really expecting $1 million Bitcoin. So prices like these are a gift, but you have to have your head on straight, because this is going to scare the crap out of a lot of people. Next month is going to be ugly. September is going to be a pretty rough month. The best thing that could possibly happen in September is we drop to 14 and we come back up and close at 20. That would be the reversal we need. But as it stands right now, it's not looking good. And the other thing to say is that resistance, it can change hands. I'm not saying that we have to go to 14. Resistance, this resistance between 14 and 20, right here, support can switch hands anywhere in this zone. So there's a lot of room to play. It won't be super scientific, but if you look at the size of both of these bodies, it's about a $3,000 body. And so there's probably $3,000 worth of movement. Wherever we close, there's probably $3,000 here. So if we went down 3,000, I mean, it would be around 17. So this is probably a minimum that we'd probably hit 17, but we could easily wick down and hit 14. Yeah, it's just the way the chart looks. I mean, I wish it was different, but when you're reading charts, you have to read it. You can't express you can't force your opinion on a chart. The chart has to force the opinion on you. So that's where we stand with Bitcoin. We are very close to closing this day, and if we close at or near our all-time high, which is around 19,700, something like that, the all-time high of 2017, it's setting us up for a pretty rough September. So for those of you who are that have cash on the sidelines, it is looking good. As I've always said, when we want to be selling up here. We don't want to be selling down here. So we want to be looking for the opportunity, but we've got to be patient and wait for that opportunity to come. Okay, so hopefully that gave you something there. You can see how we're playing right here when I go to the daily chart. So these are daily bars, and we're messing around with this all-time high from last time. Okay, so let's talk about Ethereum. Everyone was, a lot of people were nervous. They're like, wait a minute, we went short on Ethereum back at like 1500, and we had this massive day, and yesterday we were moving up, and it was like, oh, is this gonna hold? The structure is, like I've told you, it's unbelievable. You just have to trust the formation and the I mean, it's not going to work out every time, but there are so many forces going at play, shaping the direction of our move, and I have very little doubt that we will hit the 200 weekly moving average down here. And we got a bonus today. What happened? We were expecting to reject off of the neckline, and the neckline was 1575, but we did one better. We went up and rejected off of the 50-day moving average. So it's even a more brutal rejection, because this wick will count as a rejection off the neckline, but because we even got up close to the 50, technical analysts will say that this is a rejection off the 50, no question. So we went up, rejected off the 50, and now we're heading down. So this trade is in play. The other question people had that I saw was, why did we go long on a couple of these that popped out, that crossed above the 50 just temporarily? And the reason why is that it's all statistics, it's all probabilities, and what we're doing is we're trying to put our money where a higher probability trade is. And so there's a high probability that Ethereum will break down. If that's true, it'll bring the rest of the market down. But there is a chance that things, there is a smaller than 50% chance, but a chance nonetheless that we could have turned around. And in that case, when there are buying opportunities that show up in the rest of these coins, we're going to take them. And so we have to stick to the rules, not get emotional, stick to the plan. When things go wrong, we have to just be able to handle, some of that. So we're going to have to be pretty robust emotionally, and the number one way to stay strong emotionally is to have small position sizes in place. So by keeping our trades small, it helps us when things go wrong. But there's plenty of money to be made on the upside, and I've said this multiple times. But you know what? It's nice to hear it, because when you're dealing with drops and rises, math is in our favor. When you drop, you have a limited downside. When you go the other way, you have an unlimited upside. And so it's fairly rare that we will take a short position, but and there's a reason for that. It's because we want to be in more long positions than short positions, just because the math works out better. We have more upside than downside, and so if we're taking high probability trades and we are maximizing upside and limiting downside, we've kind of created a perfect formula. So again, those that are interested in seeing it in practice, you're welcome to join us on the Pro channel at cryptoinfluencers.com over there. There's not a ton left to talk about. We are, the Ethereum's and a Bitcoin, they're kind of pulling everything down. So most of the market is going to be red for probably the rest of the day. The only short that we have on the books besides Ethereum is this Unify. And it was interesting because we had crossed above the 50 and we were in green territory last night. But see, that's the importance of being patient. You just have to let candles close. You can't predict how things are going to end up until they actually give us data. We want to make data driven decisions, not guesses or emotional driven decisions. Emotions will destroy your portfolio. You have to have very rigid rules and stick to the rules. It's just part of what you've signed up for when we're trading. This is a unbelievably bearish looking candle. If we closed here, it would be pretty strong. But yeah, so going from green to yellow is no joke. There's a lot of downward pressure when this happens. And same with the red zone. So now that we're getting so many coins in the red zone, as I said yesterday, I guess red zone's up here. As I said yesterday, we love red zones because our 50 comes down. And if it comes down far enough, our next entry point will be even better. So the risk reward is even better. So even if we're upside down in a position, it's totally fine. There will be days in the future when those orders will get resolved. But what we're looking for is the perfect entry point, and that'll just change everything. So it's looking good. I'm excited about the market. I'm excited that we are making good choices, high probability choices, and we're going to watch this play out. It's not going to be fun for people that are unaware of how markets work. So I'm glad you guys have an edge. And if you wouldn't mind sharing my channel, I think it'll help a lot of people, especially that are interested in crypto. And apart from that, I hope you guys have a good day, and we will catch you tomorrow. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.